When people talk about oil and war, they usually stop at supply. But oil isn't just energy, it's currency infrastructure. And that's where the story gets more interesting. Let's define this simply. After the United States left the gold standard in the early 1970s, the dollar needed a new anchor. That anchor became oil. The US reached agreements with major oil producers, most notably Saudi Arabia, to price oil in US dollars. From that point forward, if a country wanted to buy oil, it needed dollars. That created global demand for the US currency. Why does that matter? Because global demand for dollars makes it easier for the United States to finance debt. If oil is traded in dollars, countries hold dollar reserves. If they hold dollar reserves, they often buy US Treasury bonds. That supports US borrowing. That supports US spending. Energy and finance become linked. Now here's where people get extreme. Some argue the Iraq War was launched purely to defend the petrodollar. That's too simplistic. But here's a reasonable systems question. If a major oil-producing country moves away from dollar pricing, does that affect US financial leverage? Yes. Not overnight, but structurally. And Iraq had signaled interest in selling oil in euros before the 2003 invasion. That fact alone doesn't explain the war, but it does show how energy and currency systems intersect. Now, fast forward. In 2026, we're seeing more countries discuss trading oil in alternative currencies. China pushes for yuan-based settlement. Some nations experiment with bilateral deals. The dollar remains dominant, but the system is no longer unquestioned. And when financial systems feel pressure, geopolitics often follows. The petrodollar isn't a secret plot, it's a structure. Oil priced in dollars creates demand for dollars. Demand for dollars supports US debt markets, and debt markets support US global power. Energy isn't just fuel, it's financial gravity. So when you hear conflict in oil-producing regions, don't just think about barrels, think about balance sheets. Because the next decade isn't just about energy supply, it's about currency competition. And when energy and currency systems collide, policy gets complicated.